We'll just keep buying, right? The price is going to go up. It's going to get exponentially harder, and the price is going to go up exponentially higher, and we'll just keep buying. And at some point, if we get to 5% of the supply, Bitcoin's probably going to be $1 million a coin. And if we get to 7.5% of the supply, Bitcoin will be 10 million a coin. If I'm lucky enough to grind to 10% of the supply, Bitcoin's going to be 50 million a coin, and someone will be whining that whatever, we have too much Bitcoin, but other people will have $400 trillion of wealth. Our view is it's a ratchet, and we're just going to keep cranking on the ratchet, and there's massive leverage here. I think everybody's winning if we do that.
The greatest wealth transfer in history is quietly unfolding before our eyes. As institutional investors awaken to Bitcoin's scarcity, a fierce competition for the remaining supply is driving prices toward unimaginable heights. With only 21 million coins ever to exist, and over 19.5 million already mined, the math is brutally simple. Every new buyer accelerates the supply shock that will redefine global wealth. Michael Saylor, MicroStrategy's relentless Bitcoin evangelist, lays out the endgame with trademark conviction. We'll just keep buying. The price will rise exponentially as Bitcoin gets harder to acquire. If we reach 5% of the supply, Bitcoin hits $1 million. At 7.5%, it's $10 million. And if we're fortunate enough to accumulate 10%, we're looking at $50 million per coin. His strategy is a relentless ratchet, each purchase tightening the noose on available supply while creating staggering wealth for holders. This isn't speculation, it's game theory in action. As corporations and nation-states join MicroStrategy's buying spree, the coming supply squeeze could make today's prices look like bargains. The question isn't whether Bitcoin will moon, but how high the rocket will go when the last coins change hands. One thing's certain, those waiting on the sidelines risk being priced out forever. We will now bring you more clips from Michael Saylor's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
To equate Ethereum and Solana to Bitcoin is like equating balsa wood and clay bricks to steel. And yeah, you can also lever them, but you can lever balsa wood, but levering, you can build lots of things that are steel containers, and you can use rubber bands, but it's not the same thing. So there's a reason that securities law prohibits public companies from capitalizing on securities. And the reason is because you can lever a security at 100 to 1. And so if I actually issued 1% of the float of a security, I could take $10 million and create a $10 billion market cap company. And so you would literally have 10 million in the float, and then you would tell yourself you had $4 billion of collateral on your balance sheet after you levered it up. And then you would start to act that way. And then when the bottom of the structure comes crashing down, you get a situation like Terra Luna or like FTX. Both of those were examples of companies levered on proprietary tokens. And so Solana and Ethereum are they may not be securities, but they're definitely tokens. And as tokens, they're not a commodity. And so I would caution anybody listening here against levering up on a token, right, or a proprietary asset, because it's kind of like trying to copy my skyscraper and doing it with bricks or with aluminum or with copper, right? The entire thing's going to buckle, and lots of people are going to die, and it's going to be a catastrophe, and you're going to take out the entire city block. And that did happen. It has happened over and over again in the crypto world. Happens all the time. People think that they discovered leverage, and what I'm doing is not an intelligent or brilliant idea because I'm using leverage. The reason it works is because I'm putting leverage on steel. I'm doing it with the right material. I'm actually using a product which doesn't deflect, right? And so Bitcoin is a crypto asset which does not deflect. That's why you can lean on it with $10 billion of leverage or $100 billion of leverage. And if you do the same thing with FTT token or Luna, or pick your favorite token, if you do the same thing, you're going to find it will buckle at some point. And when it buckles, there's going to be catastrophe. Look, I think the the key with Bitcoin is the protocol itself is stable. Nobody can censor the network. It's distributed enough. No one can censor or corrupt the protocol. No one can control the price. It is sufficiently decentralized and global that no company, no country, no capitalist has enough influence to be able to put it at risk. And it is the one thing that we can all agree on in that regard. So when we go to the question of companies adopting the Bitcoin standard, Jeff, I think the primary guiding principle is you want to do this well. The question is, are you going to adopt Bitcoin as your primary treasury reserve asset? That means like flip 90% of your long-term capital to Bitcoin, right? 5%, 2% doesn't really do the job. You really want the vast majority of your long-term capital. Substantially, you want 100% of long-term capital to be in Bitcoin. And I define that as you've got working capital. If you need $50 million in working capital, then you hold that in the fiat currency of your liabilities. Everything else is long-term capital. You flip that to Bitcoin. After that, right, you've got two parts of the business. You've got the operating business, and then you've got the treasury, or you've got the balance sheet part of the business. I don't have any advice to people on the operating part of the business. Every single operating business is different. The only thing you can say is that 0.1% of operating businesses are good, and 99.9% of operating businesses struggle at all times. I mean, that's the big piece of wisdom I have for you. If you feel like your business is under pressure and is difficult and challenging, that makes you one, of the 99.9% that feels the same way. The only people that don't feel that way are the ones that run the monopolies, that are either state-sanctioned monopolies or digital monopolies, and everybody else struggles. And so there's no simple unlock there. I'm going to tell you, get a monopoly from the government of the local country you operate in. That's my suggestion. Or maybe you're lucky enough to be Apple or Google or Microsoft. But if you're not, then the operating business is all about finding a monopoly. And it's not easy to fix that. It's pretty obvious, right? It's quite obvious. It's hard to be better than Amazon or Microsoft or Apple. So the real advice is focus upon the balance sheet, where it is very easy to be better than the US dollar standard or the fiat standard company. So that's the part of your business you can fix. You can fix your balance sheet. And most people don't. Like, most people don't focus on that. They put 98% or 99% of their effort into their P&L. And they're basically pouring 99% of their focus and their energy in a losing cause, and they're not going to win. And they're putting 1% into their balance sheet, where you're 99% likely to succeed on the balance sheet under the Bitcoin standard, and you're 99% likely to fail in the operating business on the fiat standard. But conventional wisdom is to focus on the operation and dismiss the balance sheet.
Ethereum and Solana might let you build, but only Bitcoin can bear real weight. Every leveraged altcoin, from Terra to FTX, has collapsed under pressure, while Bitcoin stands unshakable. Its decentralized protocol can't be censored, inflated, or controlled, unlike tokens masquerading as assets. The smart play? Ditch fragile altcoins and stack the only crypto with institutional-grade strength. As Saylor says, 99% of businesses fail in fiat, but under Bitcoin's standard, you win. Build on steel, not sand. Bitcoin's brutal simplicity always wins. While flashy Layer 2 projects buckle under technical debt and regulation, Bitcoin remains solid. No smart contract vulnerabilities, no leverage traps, just digital scarcity that grows while altcoins implode. The math is clear. 16 years of proving every, but this time it's different narrative wrong. Want real crypto profits? Cold storage is always safer than unstable protocols. In a world of overcomplicated failures, Bitcoin is the one asset that strengthens when others falter. When everything else fails, Bitcoin delivers. Let's watch more clips from the interview.
I think that all the layer 2 type applications, they're always very interesting to programmers, but no one's figured out how to scale them without some technical instability. You run into massive amount of technical problems, massive amount of security issues, and then massive amount of regulatory issues to do that. So I think that the best way to generate yield and generate a return is you buy the Bitcoin, you hold the Bitcoin in cold storage, and then you sell equity at a premium. That's the risk. You know, when you're selling equity at 3 times NAV, you're literally selling dollar bills for $3 all day long. You have a money printer. Okay. It's a risk-free money printer. So why would you do anything else if you could literally sell dollar bills for $3 all day long? And so the creation of high volatility, high optionality public equity, and then bonds, convertible bonds, fixed bond, corporate bonds, or preferred stocks. All of those are by far the best, lowest risk way to generate yield off of the underlying Bitcoin. They solve the compliance issues, right? Because you're selling a compliant security on a compliant exchange. So you don't run into this issue where you did something really cool that is illegal in the state of New York, right? Or it's illegal somewhere. So they solve the compliance issues. And then they also solve the scale issues. If you have a good bond, someone will buy. I've had meetings where someone gave me a $500 million order after the meeting.
Yeah.
Like, can you sell $50 million of something in 20 minutes? I've sold $250 million of something in 20 minutes. So if you want to scale the business, if you want it to be compliant, if you want to generate substantial material yields, then I think you want to do it by issuing securities. And of course, there's one ladder of securities in Japan, which are different than securities in America or US, which would be different than Brazil.
Mm-hmm.
It would be different in France, different in the UK, different in Germany, different in Switzerland, right? Different everywhere in the world, in Canada. So basically, securitizing Bitcoin in some kind of wrapper, it could be as simple as, okay, here's an ETF, but it could be here's a 2x ETF. It could be here's a Bitcoin-backed bond ETF. It could be here's the bond. It could be something else. It could be here's the option. Those are all the most compelling ways. I think the reason that certain people in the crypto industry don't embrace it is they don't have the technical financial capability to create these compliant instruments in these markets. So they go for the crypto token approaches, or quote unquote crypto native. But the bottom line is the crypto native approaches are only 1% of the opportunity, and they're 100 times as hard. And so the real money here is going to be made by more conventional financial firms that are going to issue $100 billion worth of Bitcoin-backed bonds, and then $1 trillion of Bitcoin-backed bonds. And then when people go, oh, well, $1 trillion, I guess is saturated, then they're going to issue 10 trillion of Bitcoin-backed bonds. And people watching are going to complain that it just seems too simple, right? It's like, and what I see a lot, Jeff, in this market is I run into crypto people that have been in the business for a decade, and they have very complicated ideas that don't work.
Yes.
And I offer them a simple idea. I'm like, here's an idea. You're a public company, sell your equity, buy the Bitcoin. They're like, no, that'll never work. Okay, well, I guess it might work. Well, what if the Bitcoin goes down? Well, blah, blah, blah. Okay, I guess it worked. And you know what the latest pushback is, Jeff?
Let's hear it.
The latest pushback is, well, it worked for you, and it worked so well that you're the winner, and there's no room for another company to do it in the market. So we literally went from, I don't think it'll work at all, to it might, to it did. Oh, it worked too well. That's my excuse for why I'm not going to do it.
Yeah.
And people just come up with these giga-brain excuses for why they don't want to do the simplest thing in the world. And The reason it works, by the way, is everybody wants to be able to buy the equity and borrow against the equity from their existing wirehouse. So like MSTR, you can borrow against it from a big bank. They want to be able to sell the volatility to generate yield on us. You can do that by selling the covered calls, right? They want to be able to, they want to solve the custody issue. I want to call my Merrill Lynch broker and buy $10 million worth of it in like 15 seconds. So if I can, it's convenient, compliant, it's conservative, it's simple, we're just solving these very simple ideas. It's like, well, how about this one? I just like to buy the upside with no downside. Like our convertible bonds are outperforming Bitcoin right now. So why wouldn't you buy something which outperforms Bitcoin, but you have a credit guarantee and you're senior in the capital structure? Yeah. So the simple ideas are working, simple compliant ideas. The hyper complicated ideas, they're 100 times as hard, they're 1% as valuable, they're not working. And my advice to anybody is, don't try to do those things. Focus on the simple ideas.
Bitcoin is currently navigating a pivotal moment in its market cycle, demonstrating resilience by holding above the $81,000 support level while facing resistance near $88,000. This consolidation comes against a backdrop of escalating US-China trade tensions that have rattled traditional financial markets, making Bitcoin's stability all the more noteworthy. The cryptocurrency market is showing signs of renewed optimism, particularly in the futures sector, where key metrics suggest growing institutional interest. Recent data reveals a significant increase in open interest combined with bullish funding rates, indicating strong demand for long positions. Aggressive taker-buy volume further reinforces this positive sentiment, painting a picture of accumulating strength beneath the surface. These developments echo the investment philosophy championed by Michael Saylor, who has consistently advocated for Bitcoin as the ultimate hedge against macroeconomic uncertainty and a superior store of value in turbulent times. The current technical setup places Bitcoin in an interesting position relative to its 200-day exponential moving average, a key indicator watched by institutional traders. Market participants are closely monitoring the $81,000 support level, which must hold to prevent potential downside, while a decisive break above $88,000 could signal the start of the next upward leg. As global markets continue to grapple with trade wars and shifting monetary policies, Bitcoin's performance in the coming weeks may prove particularly telling. The cryptocurrency's ability to maintain its value during periods of traditional market stress continues to validate its growing role as a digital safe haven asset. With futures markets showing accumulation patterns and on-chain metrics remaining strong, the stage appears set for Bitcoin's next major move, whatever direction that might take. The coming days will reveal whether this consolidation period represents a springboard for higher prices or merely a pause in a broader correction. What remains clear is that Bitcoin continues to command attention as it carves its path through increasingly complex market conditions, reinforcing its position at the forefront of the digital asset revolution. Thanks for watching. Please share this video, hit the like button, and don't forget to subscribe. See you in our next video.